Traders, I'm looking at the euro yen. I'm going to go out to a daily time frame and just show you what I've got marked up here. What I've done, I've picked up this red candle back in here, accumulation range, and I've pulled it through. So we've got this, the high and the low of the candle body on this daily big support zone. As you can see, this is reacting off it at the moment. And we'll go down to the 4-hour chart and have a look at it from this perspective. And here's the thing with this, and this applies to all the Japanese yen pairs, the Kiwi yen, pound yen, euro yen, Aussie yen. You want to jump in on a trend, and my strategy is to look for these pullbacks, swing low, swing high, retrace into the 50 to 61.8 Fibonacci, and we trade it. That's it. And I always look for an entry on the pullback. Now, when you do this in a trend, more often than not, you're going to come out on top. But at some stage, it's gonna do this. And a lot of people got caught out with this move yesterday. A lot of traders were caught out with that. I think, there was a lot of traders long jumping in on the pullback down into this level here from this previous low. Where are we? We'll just grab that. Low, high, and retrace. Yeah, people jumped in here. It rallied a bit and then it just tanked. So a bunch of stops got taken out. A lot of traders got taken out yesterday with that move. Now, you're going to find that this happens every now and again. You're going to find that the yen will surprise you. I mean, look at this trending up, and then look what happens here. Look at this. This is manipulation, guys. It pushes north with a vengeance. How many buyers do you think got involved with that? And then look what they do. Okay, they hit stops really aggressively. They push it up again, enticing buyers in, and they wipe out all the stops that were resting under here, all through this level here. I mean, this is serious manipulation going on here. But the thing with this is you can trade this successfully if you get in, you trade it low to high, retrace, buy, and follow it through. Low to high, retrace, there's a buy. You see what I'm saying? I mean, you can see that, obviously. You can see it on the chart, right? All through here. There's a ton of trades that were successful. This one gets taken out. You start again, they're successful. This last one gets taken out. All through here, and I mean, we're talking, this is going back to May the 24th, all the way through to, the 14th of May and the 3rd of May. Okay, this is 2 weeks of a really nice trend and consistent profits. And then they hit stops, and it happens again. So this rally went from the 15th of May all the way through to the 28th. Okay, there's another 2 weeks there, guys. So maybe consider at the end of every 2 weeks, possibly, go back. You want to go back and just have a look and see if this is a pattern. In any case, or end of the month as well, end of the week, this will tank. So I guess what I'm saying is stick to the plan, trade your plan, and expect to get taken out every now and again. At the moment, I'm looking for a buy opportunity. Let's just go out of here and we'll go to a weekly. This is in a strong bullish trend. All right. Can it pull back any further? I guess it can. But my bias is going to be looking for opportunities to get long more than anything. I don't want to be selling in this environment. So if we go back down to the 4-hour, I'm going to have a look at how we can get involved long around this level. So this is traded into a daily and a 4-hour combination here. This is a, nested level. Okay, so have a look back here. We've got this high where it reacted off here and retraced, and then you've got this. You can see this value area through here where it traded up and it you know, accumulation range, if you want to call it, right? Prior to this run, so this is a big level, nested daily and 4 hour. Look at the reaction off here. Okay, big liquidity. They hit it, and we get that. So I'm looking for a buy, and I'll be going down to the 1 hour, the 30-minute time frame. I guess what I want to see on this time frame, even a 15-minute, but just watch this because, you know, currently we've got a trend. My bias is bullish, given that the higher time frame is bullish. Now, and I paint this picture with every video that I do. It's going to find support somewhere. It'll range, and then expect the volatility, and then displacement to the upside. I'm looking at key support zones where this price action can play out. So let's just go back out and have a look and see what's possible here. We'll go back to the 4 hour, and I'm going to mark up some more levels here. I mean, this is a pretty big level, but then if it continues down, we've got, oh, yeah, it's a big candle. I would just try to bunch it up a little bit. You've got this range here. We'll just pick this. Let's just grab that. I'm going to just pick the low of these candles, pull it through, 4 hour. Okay, that's a potential support zone. We've got this, the low of these wicks, and this candle body close open here. Okay, and that'll make sense on the lower time frame. And then after that, the next port of call is, it's this low down in here. All right, so we've got these three levels to consider. Now we go down to the 30-minute time frame. All right, so that's one possibility, and then we've got this range down in here. That's another possibility. All right, so it could, see, what we're waiting for is this to shift gears, and we want to see higher highs, higher lows forming. It could happen here, could happen down in here. Okay, but at some stage we're going to see a break of market structure. So keep an eye on the 30-minute time frame for this to occur, and then that could be an opportunity to get long. All right, 30-minute, 15. I like the 15-minute. Right, so that's my take on the euro yen. I'm looking for buy opportunities down in. Look, I'm already long. I'll tell you this now. I've already jumped in here. I'm taking the risk with this one on one of my other accounts. But yeah, that's the play, guys. You know, and look, back up in here. Where were we? You know, it's easy to get caught out at the end of a trend. Look, this is trending up, and look at these opportunities all the way through here, and then you come to this section here, you get the pullback. All right, I mean, look, here it is. There is a buy opportunity right there. All right, that's following this trend. Okay, following this trend. Pullback on the you know, the fib pullback I'm looking at. Something like that. It touched the 50, so you buy. And I got caught out here. I think a ton of people got caught out, you know, and that's what happens at times, you know. Okay, it started to rally a little bit, got into the green, and then it tanked. But you play this right through here, and you play it well, and it's profitable. Higher highs, higher lows, and you come out. Look at it, and you come out on top. So don't lose heart, guys. If you've lost a trade, you know, with this reversal here, just stick to the plan and wait for the next opportunity and just keep trading. The idea is you have an edge in the market with your strategy. You have an edge, and you know, you're going to take some losses along the way. Don't lose heart. Continue to trade with your strategy and stick to the plan. And I think one of the biggest mistakes a lot of traders make is position size. That's where you're going to come unglued in a big way. So what you need to do is this. I'll show you get in here, we buy. All right, so here's all the opportunities to buy. And let me just explain something about position size here and why this is the key to success. Like if you mess up your position sizing, that's where you're going to blow your account. And think of it this way. Okay, so we know that this is bullish and this continues, right? So here's some trades. Now, consider this dollar value. Okay, let's say for argument's sakes, you're risking $20 a trade on every one of these trades, no matter what you're trading. The risk is the same, right? So we're talking about the stop loss range value in dollar value on your account could, well, whatever it is, okay, let's just say $20. So you know that with every one of these trades, you're risking $20, $20, $20, $20. If your default target is 2R, 1 to 2 risk reward, so you risk 20 to make 40. So you only need a 40%, less than 40%, well, a 40% win rate to build your account, to do better than, much better than break even. 40% win rate. Okay, so this is a high win rate, and you can afford to lose a few here and there. Stick to the plan, and you know, you could keep your risk 0.1% of your account or 0.2% of your account, but keep the risk consistent no matter what you're trading. That's the key. Get your strategy down pat. Okay, we've got this pullback on the 4 hour. We look for the rotation on the retrace. That's fine. It's a decent strategy. I'm building accounts with that. Stick to the plan. And your position sizing is really important. Anyway, guys, look, I'll wrap it up at that. I'm looking for an opportunity if this rotates. And yeah, I'd love to hear your thoughts on this. Definitely comment below. That would be awesome. And look, with that, I hope you have a great day, safe trading, and see you in the next one.